All right, so I'm working with a small bank doing the Revive method, and this one is actually a wholesaler brought it to me in Laramie and at a really good price. The ARV is like $430 on it, and we're getting it for about $260, and it's pretty much cosmetics. So I'm overfunding it so I can finance all of it. So what I'm doing is I wrote the contract for like $350, and then I'm doing a credit back to myself. Or actually I'm really paying myself a big wholesale fee, which I'm going to talk to her about. But this is what's allowing me to finance almost all the purchase price, because the bank's going to give me a loan based off of the purchase price that I show them, right? So if I show them a higher purchase price, even if I end up crediting that back to myself, it helps me get a higher loan amount, right? So that's typically how the banks work. So she sent an email, but you got to like know the small banks and have relationships with them to be able to explain, this is what I'm doing, this is why I'm doing the credit. But in a way, it's a way to use bank financing and not have to put 25% down when you get a really good deal. So her question is, which I'll hop on her now, but Bobby was wondering, she's like, wait, how is your other, because I'm actually going to wholesale it to my fund, and my fund's going to be involved, but there's a marketing fee. But she's like, well, you're not. Hey Bobby, how are you?
I am good. How are you?
Doing good. So I know I sent you a quick note on that one. Yeah, I just wanted to kind of talk it through. So on my side, I'm going to set up that JV agreement to where I make sure that Cathedral Group is profitable. Give me your feedback so far with that. Do you feel like you'll have any hangups?
Well, so basically kind of what I was sending you is okay, so for when I present it to the committee, I typically do a fix and flip with showing like, okay, here's how, we're going to get paid and they're going to make money. Well, when I started like actually plugging in those numbers based on the current, all the current numbers, it's a negative number. So I'm trying to figure out how to best present this and explain this in a way. Do you know what I'm saying? So
yeah.
Like, I just don't know how to.
I know exactly. Because at the end of the day, that 100K credit, like part of my profit is already worked onto the front end, if that makes sense to you, right? So I could say that, go ahead.
So let's pause right there for 1 second, because I guess what I don't understand is that, because Wyoming off market is essentially you,
yes.
But Cathedral has a different ownership structure. So that's why I'm confused as to like, how does Cathedral and its investors benefit from the transaction if you as the assignee, or signer, I don't know what the right terminology is there, but are taking your cut up front, and they may or may not make a profit. I guess that's the part I'm not following.
Yes, so that's where that JV agreement will come into play. It's the JV agreement. I'm gonna write it, and really, if you want to share this with the board, you could. But yeah, I totally get what you're saying. We need to make it really simple. But the JV agreement is gonna outline that to where if, let's say that we had to sell this thing and let's say we couldn't sell it for $430, we end up selling it for $390. What we would do is I would set it up to where now WI would credit that back at closing. Essentially, I'm going to set it up to where Cathedral is at least going to make, I don't have the numbers in front of me, but say $30,000 is they're going to make a minimum of that, and then WI will make everything after that. But that's where that JV agreement will outline that. So technically it's going to be funded up front, right? But on the back end, if we end up having a loss, it's really not a loss, right? WI is just going to make less than 100.
Correct. Okay, and you'll just, I guess I was trying to understand too if there was a specific like percentage that Cathedral will get as like kind of like a floor on these, or is it a number, is it a percentage?
Yeah, typically I've done it both, but typically I'll just say they're getting the first $30,000 of profit, and then WI gets everything after that. That way they kind of lock in a profit.
Okay. I don't know exactly how I'm going to present this, but that helps me figure out how it all shakes out in the end. So I will run with that, and I got to figure out the best way to present this, I guess, or like show the picture, because obviously my picture right now doesn't look very pretty.
Yeah, because they're not.
So let me mull that over a little bit. I can see with it being laid out as thin as it is, they may push back on that size of an assignment. I could see where they would say, let's do 50-50, right? 50% or 50,000, whatever, on the front end, and then you get the rest on the back end. I'm just anticipating that. I don't know for sure if that's going to be what's going to be the response, but I would just prepare you for that being a counter.
Yeah. Yep. And if it's an easier path saying that, hey, of that 50,000, 50K is going to WI, 50K is going to Cathedral, and then it's going to pencil out better. That could work as well. But do you feel like they're going to be like, okay, well then we're not going to loan as much because part of our loan is going back to Cathedral.
Yeah, they're not going to, if they dig into it, they're not going to love you getting all the money on the front end and us taking the risk on the back end. Obviously, like, you have the money and you'll cover the, you know, if there's a gap or whatever, but that's just where the banker mind is going to be. So I guess my thought process would be, you know, it's the assignment fee is reduced to $50,000. That way it's not.
Yeah.
Well, I guess you're not going to change it. Well, now.
This is good. Keep going.
So if you reduced your assignment by $50,000, would you reduce your purchase price?
No, I think we'd leave the purchase price alone. But what we could do is say $50,000 goes to WY, and then $50,000 goes to Cathedral. But I would be, if the bank likes it better, we could say that $50,000. Yeah, I'm trying to think of a way to pay it on the back end.
Yeah, I guess my purchase price isn't going to change in either. My thought process was that the purchase price would change because it would be inflated by the assignment, but if that doesn't, and so explain to me how. So you're assigning. So the Polar, whoever the original buyer was. So were they originally under contract? Because I feel like you gave me the number 260 at one point. So was there a contract for 260 or 360 from the get-go?
His original contract was 260. Was the original contract with him, and he's getting 20. That guy, yes. Okay. And then we went to 100 to make, essentially, yeah. And again, 100's a higher number, right? But it would, in principle, it does happen all the time where I found the deal. WY is going to sell it to Cathedral at a market value.
Right.
And if that's a compromise too, and maybe we try it too, if they're just like, hey, it'd be great to know if we knew the number, like say maybe 360 is too high and it's got to be 330 or 320 or something. We could still make that work. Just getting more cash we put in.
I was trying to run some other scenarios last night, and so I feel like that's where obviously the rehab cost isn't changing. I mean, I guess I don't know how I just need to be able to show that you're going to make money on this show based on the current figures.
Yeah, show the Cathedral would make money.
Yeah, exactly. Cathedral is going to make money. Because I get that you, with all the entities, like, are going to make money at the end, but when I look at the specific transaction from just Cathedral, it's not showing as profitable, though I understand in the end it will be, but as far as spending it.
And maybe that's keep going, but maybe that's sort of, because let's say that you could run numbers again at, like, instead of 360, you run it at 340 and see what that kind of looks like. I mean, it'd be great if we can get it through to 360, but if it had to be 320 on the purchase price, therefore it'd be a $60,000 fee. But then now that gives $40,000 more profit. And can you run it as because again, like the cost, or you're going to need, because I see how you did that. You did like 6% or whatever it was over a year.
Well, I did 6% of the sale, like for agents and stuff. I don't know what.
That was it. Okay, never mind. I would think you were thinking interest and all that. Okay, yeah, that's a good point.
I did like a year's worth of, I kind of did like a blended, like if it were a full year, but then I even reduced it. So after we talked about like the shorter time frame, I even reduced it to like a 6-month time frame, and my keyboard just died, so I can't change any of the numbers from the Excel spreadsheet when you called. So, but I think that I had reduced it to like 6 months worth of kind of an estimated interest payment or interest cost. And I think it was at like 14,000 negative, because your agents are like, when you list these properties, you do still pay an agent, correct?
Correct. Yeah, pretty discounted rate. We pay like 3,000, but we pay like 3%.
Okay, so you don't pay the buyer side,
or we're paying, my seller side is really cheap, so I'm just paying the buyer side like 2%, and then my seller side is like 1%.
Okay, so if I just even discounted it to 4 seller. All right, well, I think that was half. Well, I think I'm going to figure out kind of how to massage it and how this is going to look based on the numbers that currently are in play. And then I just want to understand how I can counter in a way that still works. And I think that counter is going to be just reducing that purchase price.
Exactly. Yeah.
And so I'll have that in my back pocket. That's not how I want to lead the conversation, but I just want to be able to have it in my back pocket and know that that's still going to work for you. So.
Yep.
But
totally
320, like a 320 would, I think that should. So here, I'm going to rerun these numbers once I can get my keyboard back up and running. But
okay.
I'll run it at the 320, and I think that should give us enough margin to work with. But like I said, I'm going to try to present it as is. And I just want to make sure I have another option so it doesn't just get turned down altogether. So.
Okay. Yeah, that sounds good. And then, and let me know the feedback too, because we've got some other little ones kind of popping up. But would you guys I know, I'm assuming Wheatland, Cheyenne, Laramie are all good ones. I mean, I get a lot of stuff pops up in Casper and even like western, like Rock Springs, Evanston area, even Sheridan. But would you, or any of those areas you guys would look at?
Casper for sure.
That's right, you guys get a branch.
Yep. So Casper for sure. Sheridan possibly. That area where we've done some kind of random stuff up there, so it just kind of depends. Evanston probably less so. I can chat with Aaron a little bit too. I know Casper for sure. I know we've dabbled a little bit in the Sheridan area. I don't know that we've done anything recently in Evanston area.
Okay. Or even Rock Springs. And again, I'm buying these ones at always at a pretty big discount, but.
Right.
Okay.
Well, let's see how this one goes, and I think the other ones maybe less so the location and just more so that the numbers all work out, and maybe I'll just try to get some more feedback. I'll see how the conversation goes with this tomorrow.
Okay.
Maybe just because this committee, for the most part, is going to be able to approve these small ones, and so if they have further feedback on either ways they'd like to see it structured or limits on where they would want it, I'll try to get that feedback from them while I'm presenting this one.
Okay, that sounds perfect.
All
Thanks
right,
a lot,
great.
Bobby.
Thank you so much, Casey. It was really, this helped a ton, so
Yeah.
thank you.
Well, thank you. Not many lenders are like understand this and wrap their head around it and can present it, so I appreciate you.
Yeah, of course. Thanks, Casey.
Okay, see ya.
Bye.
All right, dude, that lender is awesome. Yeah, you got it. Oh, no. But that's a non-lender. Not many lenders are like that, who will like try to understand. They're kind of like agents in a way, right? They're like fit in a box. But yeah, that's, you guys track it. We're trying to, because if you guys haven't seen the spreadsheet, but I'm just trying to get this so I can finance 100% of the purchase, and therefore I have to increase the purchase price, and then I get myself a credit back on it.